know, like we all know something's coming. It doesn't look good. Something stinks out there. What is it?
Well, you know, we are in the greatest bubble in history. We've never seen a bubble across all asset classes, so global. And all I hear from most economists and commentators, well, this isn't really a bubble because of whatever. That is so typical of bubbles. People get high in bubbles. When stocks go up this much year after year, real estate goes up this much year after year, you're sitting on your you know what, making money doing nothing. What's not to like about that? The problem is they're not real. They start real, and this one is the ultimate, Chris, because this boom, I was predicting back in the early to mid 80s that we'd see the greatest boom in history with baby boom spending that nobody saw coming in such a large generation. But in 2007, that peaked right on cue, and we've been living off of money printing, just printing money out of thin air, and that money's not going into the economy. The economy's been growing 1.6% average since 2009, the worst growth in all of history, and yet we got the strongest, bubbliest, greatest stock market advance in history in this very weak period. It's because we've been living off of printed money while the baby boom generation spends less and less just to get people to spend a little more. And then what we really have is a 4% plus growth economy for the affluent, the top 10 to 20%, and a zero growth for everybody else, Homer Simpson and the other 80%. And that's not healthy either. So what I'm seeing here, and this is coming a little late on my cycles because so much stimulus, I think stocks are peaking this year. I think it could be happening now, or it could happen by early June in the near term. And at the very latest, later this year, I think it's most likely happening now. This thing has gone up and up and up. Now we have interest rates rising and inflation late stage. And that's the type of things that work against this. But again, what we've had is exponentially more money printing, but something called money velocity, how much the money is invested and profited from and reinvested has been going straight down opposite. This is like the jaws of death. To have money velocity collapsing and money supply going up only because of money printing and then getting this lousy 1.6%. So I think it's a great time to sell stocks. It is a great time to get into alternative investments, things like you're talking about. When this bubble peaks, it's going to be a deflationary scenario. Consumer prices are going to fall, all financial assets, real estate, stocks, and whatever's gone up the most, the stocks or the real estate, the more it's going to fall. Is Omaha going to fall much? No, because nobody wants to live there except for Warren Buffett, okay? I tell people in real estate, what was it worth in the last downturn around 2011 to 12? That's the most likely target, and it's going to be lower than you think. And at the worst case, what was it worth when the bubble started back in 2000? And stocks are going to go down 65 to 70% at a minimum, and maybe as much as 80 or 90, like 1929 to 32. Now, again, nobody expects this. Oh, the government won't let it happen. The Federal Reserve, central banks won't let it happen. These are the ones pumping up our economy. They are shooting themselves in the foot. The more you pump up, and I don't care what balloon you have, there's a point where it'll pop, okay? You keep blowing it up. They're the ones blowing it up way against the reality of a slow economy. And they're the ones setting, so it's going to have to burst. And let me put the most important number in the world economy. And I've probably got to look this up. It's probably 10 trillion higher. $525 trillion in financial assets, real estate, stocks, bonds, that sort of stuff. Now, the more important ratio is that 6.5 times global GDP of about 80 trillion, okay? So it's normally 2 times, okay? Maybe 3 at a stretch. So it's going to be the collapse of this 525 trillion that is going to particularly make who feel less rich? The rich. Homer Simpson's going to lose their job, some of them for a year or two or so, but the rich are going to lose the most wealth since more than 1929 to 32, because we have so much more wealth per capita, and it's so much more global now. Not just the US and Europe. China's got wealth. Southeast Asia's got wealth, on and on and on, even India and Africa and stuff. So this is going to be what I've been calling for a long time, the crash of a lifetime. The strategy is extremely simple. Get the hell out of the way of it. Continue to grow your money so that when this bubble collapses, the world is your oyster. You're going to buy any financial asset you want, any business you want to take over, any real estate. You should have your sights set on now what you really want to buy the most long-term for your life, for your investments. And again, protect your money now, make solid income and opportunity, and be ready to pounce somewhere between late 2022 and 23. That's when I see a bottom. I have cycles galore, but it's a hierarchy. I know a lot of cycle guys. I don't even listen to them, frankly, because they don't have them in a hierarchy. You have to understand which cycles are most important and what's the domino effect. I got my 4 biggest cycles all pointing down into late 2022 and only one, actually a 5, pointing up gently. That is the most likely time for us to see a bottom and maybe a hangover after that into 2023. Now, from there on, you have the next global boom. Now, here's the other secret, other important. Number one, don't listen to economists or your financial advisor. Most financial, okay? They're just not going to see this coming. It's not acceptable, and it would be bad to even say it. Well, somebody has to say it, so it's me, okay? The next boom is not going to be like this boom. This is going to happen in Southeast Asia and South Asia, which includes India and Pakistan. That's going to be the center of the next boom. And for any lucky people in Australia, I sell more books per capita and speak more relatively in Australia than anywhere else. These people have the strongest demographics in the developed world, where most people are either moving sideways or down for decades to come. And they're right on that Pacific rim where all the action's going to be. In fact, it's not my favorite city, I hate to say it, in Australia, but Perth is the city that's sitting there. It's the smallest city, growing the fastest, sitting there the closest to Southeast Asia and India, where the action's going to be. So there's huge opportunities, but the important thing is people just have to realize things have been too good too long. In other words, this boom, already the greatest boom in history, should have peaked in 2007.